Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris McIntire. McIntire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning, helping to clarify and uncomplicate the financial world. He is president and founder of McIntire Retirement Services, Chris McIntire, helping us to be prepared and not surprised and expect the unexpected. Chris, in the financial world, it seems like a lot of people get surprised all too often.
Peter, this has been the year I've had to tell folks that, not to expect a 45% bounce in the stock markets. I mean, it seems the greed factor is really out there right now. So, when we get the people with the fear of missing out, or FOMO, if you will, when the most conservative people want to get invested into the market all of a sudden, and those that are most aggressive are thinking we might want to get more conservative, kind of tells me, we might be at a turning point here where, some things could be expected just from, past experiences there. So I completely get that. Setting the expectations at 35% is not a normal rate of return for the market.
Well, I would be happy if we could avoid a 35% decline, Chris, but we know that these regular market cycles happen, and they happen with some amount of frequency. There have been 14 major market declines in the last 100 years, one about every 7.25 years. And on average, we have lost just about 40% in each one of those declines. And yet still, investors seem surprised each time one of these market drawdowns happen. And so today on the program, we're going to be talking about some financial myths and misconceptions, some misunderstandings that could lead your plan astray and could determine your financial outcome if you are dependent on any of these to hold true for yourself. But we also want to make sure that you are prepared for the unexpected. That's what the planning process is all about. And Chris McIntire can help you put together and construct that plan. If you would like to review and evaluate your current plan to understand the assumption that it is based on, and to make sure that you are prepared for some of the things that will face us into our financial future, Chris McIntire can help you construct that plan, put it together, look at all aspects of your planning with you. Just give a call, 800-868-1194. That's 800-868-1194. 800-868-1194. Chris, to start, you have this list of the 12 questions to know if you are prepared for retirement. Just going through this checklist is going to help somebody be more prepared and ready for some of the things that unfortunately catch other savers and investors by surprise.
Certainly, Peter. We start off our list of 12 questions. We, do a number of these lists throughout the show. Is, do you know how long you will be able to generate the income you need if your paycheck stopped today? And, that's really an interesting question that starts the thought process, because so many people have to change their mindset from, well, I've been used to getting a paycheck. That's what I'm used to living off of. Somebody else was giving it to me. Now, all of a sudden, I'm almost in business for myself, where I have to generate that paycheck out of what I have saved from what somebody else was giving me, basically. And, it's a different paradigm, if you will, a way of thinking that for a lot of folks, they are fearful of making some different changes into their investment portfolio, because what got them to retirement might not be what gets you through retirement. It's the big losses that will hurt you while you're taking money out of your portfolio that provided opportunities while you were putting money into it, if that makes sense.
And I like the way that this question is phrased, Chris, because we have seen too many people surprised by the fact that the paycheck stopped before they planned on it, before they anticipated retiring. Their company, unfortunately, let them know that their services were no longer required, or accident, sickness, injury has led many people to not be able to show up to work and earn that paycheck. So regardless of your phase in your financial progress, you do need to be prepared for that surprise. But specifically, Chris, when we retire, we plan on not having that paycheck any longer, and still many savers and investors are not prepared and don't have the answer to that question of how long can they make their money last and create a sustainable paycheck for themselves.
If the market continues to do what it's doing, we should be okay. That's kind of a patented answer that we've heard, many times. But, sometimes it's just the luck of the draw. Like, for folks that retired before the pandemic a couple of years, hey, we had good years in the market there. They did quite well. March of 2020, obviously we hit a big bump in the market with the pandemic. We've come back on the other side. And now with all the variants and whatnot, hey, we're probably going to have some tug of war going forward here. It looks like, here in the United States, we're going to have to learn to live with COVID, not without COVID, if you will, as it evolves and whatnot. And it's going to, cause disruptions in our normal ways of life. I haven't been on an airplane in 18 months and don't care if I have to get on one for another 18 months, Peter. So some of us have really adapted our lifestyles, to do things different. And that has a different change in economics. I've not been in a hotel for 18 months since February of 2019, and you're looking at somebody who spent 45 days a year in a hotel typically, so, the economic impact of business travel is the point I'm trying to make, and how we adjust our investing schedule. Brookstone Capital Management, our investment platform, just made some adjustments to some of the dividend paying stocks that we utilize. And they made an interesting assessment here that a 50-50 portfolio of 50% stocks, 50% bonds, the yield, which would be dividends and interest, is less than 2% on that right now.
Yeah.
So the traditional way of people generating income has changed, but has your plan that you've got in place changed with the economic environment that we have at historically low interest rate environments, and, different dividends from different companies. And, look, we can't sell cars right now because we don't have any cars because there's not any chip. How are we supposed to pay dividends?
Yeah, well, I think that you hit on several things that, if we break it down, Chris, are individual surprises to folks. The fact that the market doesn't always go up, the fact that we cannot count and depend on some consistent rate of return, the fact that how much income we can generate from our portfolio has changed pretty dramatically over the last 10, 20, 30 years. All of these are factors that a lot of Wall Street type projections for retirement are actually based upon. But your outcome is only as good as the assumptions that your plan makes. And so we need to carefully examine each of these. I think if you ask any reasonable person, does the market always go up? They would answer no, of course not. The market doesn't always go up, and yet still we seem to be surprised by that, Chris. And it's because many of our plan projections are assuming a consistent linear rate of return, whether it's 8 or 9 or 10% that we have been told we can count and rely on. I'm actually a member of a retirement discussion forum, and it gives me some food for thought and fodder for conversation for this program. But it's a retired or thinking of retiring discussion forum. And somebody in that forum recently posted, they were trying to figure out their retirement outlook. And they said, well, we can count on the market generating for us an 8% rate of return. And hearkening back to some things that we've talked about on this program, I responded, hey, you can't count on an 8% rate of return. There was 13 years from 2000 through 2013 where, yeah, the market returned 100% twice during that decade. You would think it would be a fantastic decade, but the S&P actually produced a zero-sum gain. And then the average rate of return between 2000 and 2021 has been less than 5%, with a whole lot of hiccups and back and forths along the way. So moral of the long story short there, Chris. No, Chris, we simply cannot count on that. And yet a lot of people still do. In fact, Chris, the way that people make decisions about what mutual funds they'll invest in their 401k is oftentimes based on this past performance average rate of return that they advertise.
Yeah, and that can be a dangerous thing, as you know, because if you lose 50%, make 50%, make 30%, that's still a 10% average rate of return. And it basically got you back to where you were, without any gain whatsoever. So, it's kind of it's different from spending averages to spending the real rates of return, if you will. And then, in today's world, what we're looking at right now, Peter, is obviously the inflation threat. And, is this the same inflation as we had in the 1970 oil embargo? No, because that was all centered around just oil that drove everything else. This is more of a supply and demand on all kinds of consumer goods, but also wage-based inflation, where people aren't wanting to work at restaurants. They're forcing wages to increase because, let's be honest, there's a part of our political factions out there that wanted a significantly higher minimum wage. And now, they did not get that passed legislatively, but now people are saying, I'm not going to work until you pay me that much money. And with the government giving extended unemployment, we can make arguments one way or another here. I'm not trying to get political here, but, we have inflation with gasoline, inflation with food, inflation with, automobiles, inflation with, basically everything. And then our money sitting in a bank account right now is making zero. So a real threat, that many people who are listening to this program today have not had to deal with inflation in a very, very long time.
Well, and again, Chris, we know that inflation is a factor, and yet so many people are surprised when it rears its ugly head because it is not actually factored in to their planning projections. Unfortunately, a lot of plan assumptions simply assume that we are going to need the same income 20, 25, 30 years into retirement that we do on the day that we retire, that our need for income is going to be flat. And so when inflation happens, either slowly over time and then all of a sudden we notice it, or there's a spike in inflation like what we're seeing currently, that should not come as a surprise if we have planned properly and appropriately. And I know with the kind of planning that you do there at McIntire Retirement Services, you try to help your clients factor that kind of thing in and build in increasing streams of income or extra streams of income that they can kick on to address inflationary needs.
Absolutely. A perfect example is my father-in-law, who is 92. He retired at age 49. Okay. So he still gets the same pension dollar amount, 43 years later, if you will. Imagine what inflation has done to that. It has eaten more than half of his purchasing power of what he was getting 49 years ago.
Well, again, if you would like to make sure that your plan factors these potential surprises in and addresses them in the planning process so that you are prepared if and when they occur in real life. That is what Chris McIntire offers to help you do. That is the value of being tuned into the program. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194. Chris will walk you through and help guide you through the planning process, formulating your game plan for retirement at a high level, addressing the major concerns of all savers and investors and planners: income, investments, taxes, healthcare, legacy, and then obviously many, many subcategories within each one of those high-level items that will be addressed and customized to your individual specific situation. All you need to do to get started is give a call, 800-868-1194. That's 800-868-1194. 800-868-1194. Even if you already have a plan in place, if you want to examine the assumptions that your plan makes and make sure that you are comfortable with those, if you want to make sure that no stone has been unturned, no hole has been unfilled, no issue has been unaddressed, that's what the review process and strategy session is all about. Pick up the phone and give a call, 800-868-1194, 800-868-1194. Chris, you spoke to the lower income rates, the lower dividends and yields from stocks and equities and bonds and fixed income. What that amounts to is a much lower cash flow from our portfolio than what used to be advertised as a reasonable cash flow. And a lot of people are surprised when they cannot generate as high of a cash flow as they thought they might, especially when we are told that your portfolio should generate 8 or 9 or 10%. A lot of people have much higher expectations for the income they can generate in retirement than what is actually prudent to be withdrawing.
Yeah, you're absolutely right, Peter. Creating those income streams is one of the biggest pieces for retirement for everybody that we work with. And, what are the best mechanisms to make that possible? We use a fair amount of accounts that come out of the insurance industry because we get mortality credits, which means the longer we wait to take our income, the higher our income can be. We can utilize some safe strategies that the insurance industry provides us to have a protected account with some contractual guarantees that may have some form of potentially increasing that income for as long as the husband and wife are alive, passing on those remaining assets to beneficiaries, not having a discount in that income payment if somebody was to pass away early as well. So, just in today's investment world, there are so many unique vehicles for unique sets of circumstances, and it's important upon yourselves to be very educated on these issues. When it comes to what does the insurance industry offer me, over what Wall Street offers me with the typical stock bond type portfolio? Do I have a need for real estate? And with inflation, a lot of people think, well, I should own gold in an inflationary cycle as well. And that could be an important consideration as well. But gold doesn't pay any dividends either. It's not an income generator.
Well, Chris, you raise an interesting point there, is that we are talking about financial surprises. Not all of the surprises are bad surprises. If people take the time to carefully examine their options, if they plan, they may be very surprised at what the outcome can be. Many of the people that have come to talk to you didn't know if they were ready to retire. They were surprised to find out that they were in pretty good shape after a review and evaluation. Now, that's not every case, but a lot of times you're able to give somebody kind of that good news and reassurance. A lot of people don't want to take the full risk of the market, but they feel like that's the only way to get a reasonable rate of return. They come and talk to you and find out that there are some alternatives that are much more conservative or protect principal, don't take on that risk, but still have the opportunity for growth. And likewise, a lot of people are not satisfied with the low interest rates they're getting at the bank, and they come to talk to you, and you have options available that maybe they had not heard about or considered or discussed previously, and you're able to show them ways to drastically improve the interest rate that they are earning, even without swinging all the way to the other end of the risk pendulum spectrum and pushing money toward higher and higher risk. So there can be, in making a long story short again, many pleasant surprises if we take the time to plan and consider the variety of options that are available out there in the financial world.
Yeah. And just this week was kind of funny. I had a client come in and, we talked about her Social Security benefit and pension. She's a widower, divorcee, and, ended up being, hey, I think you could go ahead and retire here, in the month of December, like you planned. And, I get an email a little bit later on during the day that, you know what, I think I'm just going to work through the year anyway. And then later on that day, I get a husband and a wife that came in and said, hey, you're not going to believe this, but we both decided to retire, and they had planned on working a little bit longer as well. So there are pleasant surprises, and, they have some alternatives in place. Both of them have some lifetime income pieces with us, and they have some investment pieces with us. So, an overall retirement plan. And, we cannot discount, Peter, the importance of planning for long-term care issues as well, because that's one of the biggest threats. We talk out so much about the stock market eating 30% of your portfolio, but a three-year stay in a nursing home could eat 100% of your portfolio. And why not look at all the different options that are out there to leverage some risk? And, we personally have dealt with that in our family and are dealing with that right now on a couple of different fronts. So, something we're very well versed in, and look at all the different options that are out there to reducing threats, reducing risk, and using some leverage to offset that risk to someone else.
Yeah, very, very scary when you look at the statistics and the information that's available on the number of people who actually do encounter and require some type of long-term care, and then the length and duration and the expense of that care. Now, Chris, another kind of financial myth, and something that I see that there is reason why we could convince ourselves why we do not need life insurance in retirement. But there is a very specific reason, time, and place for the value of life insurance throughout our financial progress. For anyone that is, a responsible adult with children, with a mortgage, with a spouse, with family members who depend on our income, with debts that we need to pay off. There is a reason in our younger lives for life insurance. And I think most people can identify that and hopefully get it in place so that your family does not have that ultimate unpleasant surprise dealing with those things. However, we retire, Chris, and the kids are up and out of the house is paid off. We don't have a paycheck that we need to replace any longer, and we've got this big lump sum. I see that we could probably convince ourselves that we do not need life insurance, but that question that you brought up of the cost of care may be a reason to continue at least considering the value of life insurance as a piece of our retirement plan and portfolio.
Yeah, life insurance, the biggest benefit that it offers is if you pass away, a lump sum of income tax-free dollars. Some of the other benefits it can offer is you can accumulate cash value inside your policy, create a tax-free income stream for yourself. It's a strategy that I personally use. You can also use life insurance if you have a newer policy and let's just say you have a $300,000 death benefit. And if you have a long-term care rider attached to that, you can use a percentage of that death benefit to pay your monthly expenses with long-term care needs, and sometimes pay a family member to take care of you, pay other even non-licensed professionals to come in and spend time with you. Some of the other home care providers that are out there that aren't necessarily nurses. So a number of different issues you can use life insurance to solve: a safe strategy, a tax strategy, a death benefits, survivorship strategy, and then long-term care strategy as well. Find me a mutual fund that does all that.
Well, again, if you would like to look at your planning, if you would like to carefully examine or construct a plan for your financial future, review the assumptions that your current plan and your outlook is based on, because your outcome is only as good as those assumptions. So let's understand what they are and then carefully evaluate whether we are comfortable relying on them. That is part of the planning process there at McIntire Retirement Services. It is part of putting together your game plan for retirement. All you need to do to take advantage is pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris, another surprise for a lot of savers and investors, there is an assumption that we will need far less income for whatever reason in retirement than we needed during our working years. And a lot of people are surprised not only that their need for income doesn't go down, but in fact, sometimes it goes up, because every day is sort of a Saturday in retirement. And then that would also mean that we don't pay less in taxes in retirement, as we have been taught and told will happen.
Sure. Some people have made a very modest living in their real world, and they were incredibly great savers through 401k investing, getting the free match, and end up with a very large 401k portfolio, if you will. It might be 7 digits, could be $1 million, $2 million off of an average, Midwestern worker, if you will. And all of a sudden they need to buy a new vehicle for $40,000 or so, pull that out of their 401k. All of a sudden now they're in a tax bracket they haven't been in quite some time. And then they have required minimum distributions that are going to get them at age 72. And on $1 million, that's $36,000 a year, or even a little bit more than that, Peter. So, the unexpected, tax loopholes that are out there can certainly be a shock to the system as well. And that's why we've been advocating, looking into Roth conversions, Roth IRA conversions, not contributions, conversions, and depending on your income and your specific tax basis. And we're getting into that season right now where we'll be helping our clients and some of the listeners to the show here to get them to make good, clear, concise decisions regarding their tax status.
Well, again, if you would like to go through that planning process, that review, that strategy session, pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Avoid unpleasant financial surprises. In fact, you might be pleasantly surprised at where you stand and how good the outcome looks, how good your outlook looks when you do put together a proactive plan. Chris McIntire has helped many across Northwestern Ohio, avid savers and investors, those retirement-minded individuals who are serious about your financial future, might have questions, might have concerns, might just want to review and double check the current plan. Chris offers that on a complimentary, no cost, no obligation basis. All you need to do is pick up the phone and give a call, 800-868-1194. That's 800-868-1194. Chris, not a whole lot of time left, but a couple things that you had noted. When reviewing a lot of people's investment portfolios, sometimes you find that they are very surprised by what they are paying for those investments and for the advice and the guidance that they are receiving on them. Fees matter, and we don't want to be surprised by the fees. That should be something that we clearly understand.
Certainly should be, Peter. And, sometimes people, don't understand what they're paying and why they're paying it. So like in our world, we help people analyze their tax situation, analyze their investment portfolio, obviously do their retirement planning for them. And many people, they're paying right now to manage their money that aren't managing anything else within their retirement landscape. They say, well, you need to go out and seek a certified public accountant to give you tax advice. Or, if you call up your 401k provider, they may say, well, we don't provide any tax advice. You need to pay somebody else to do that. And, sometimes in our world, we help people do that. We reach out to some of our CPAs that we have, or some of our attorney friends that we have, to do some, to get some answers where they would typically have to go out and pay for that on their own. So, sometimes you get what you pay for. If you're just looking to do it as cheaply as you possibly can, because that's what some of the biggest talking heads said, then that's what you're going to get, not much.
Well, again, if you would like to have more confidence in your financial future, have a better idea of what the outcome looks like, that's done through planning, ladies and gentlemen. We would rather be prepared than surprised, and take a look at the financial future. Expect some of the unexpected. Can we predict everything that is going to face us into our financial future? Absolutely not. But we can be prepared for more of those than most people are. More of the things that we will face, the risks that we will take on. We can plan proactively and put ourselves in a much more confident, stable situation. And that's what the game plan for retirement is aimed to help you do. All you need to do to take advantage, to get that process started, is pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194. Unfortunately, there's all too many factors that people have not planned for and will be surprised by. Don't be one of them. Procrastination is not preparation. Chris wants you to be proactive and get that game plan for retirement put together. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194. Chris, we always appreciate your time here on the program. Thank you for reminding us to plan ahead, to be prepared, so that we expect the unexpected, and to have that plan in place to carefully examine our assumptions and our outlook and make sure that we are comfortable and confident with it.
I appreciate it, Peter. It's always good to be with you out there. Everybody be safe, and thank you for listening today.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.